What happens if you start investing at 18? Imagine this. You're barely out of high school, maybe working a part-time job or starting college. You've got bills, classes, and probably not a ton of money to spare. But what if I told you that even investing just a few dollars a week at 18 could make you a millionaire by the time you retire? Without winning the lottery or landing a six-figure job? Let's break down how. Most people don't realize this, but time is the most powerful tool an investor can have. When you start at 18, you're not just investing money, you're investing time. That's because of something called compound interest, the magical snowball effect where your money earns money, and then that money earns even more money. Let's say you invest $200 a month starting at age 18 and stop completely at 28, just 10 years of investing. Then you let that money sit in the market, earning an average 10% return per year, like the historical average of the S&P 500. By age 65, you'd have around $1.2 million, even though you only invested for 10 years. Now compare that to someone who waits until age 28 to start investing the same $200 a month. They invest every single month until they reach 65, almost 40 years, and still end up with less money than you. That's the power of starting early. Starting at 18 isn't just about money, it's about mindset. When you invest young, you develop habits that most people don't form until their 30s or 40s. You learn to be patient, to think long-term, and to see the bigger picture instead of chasing quick wins. You also get to make mistakes early when the stakes are low. You might pick a bad stock or panic sell once or twice, but those lessons will make you a smarter, more confident investor later on. And here's something most people miss. The earlier you start, the less you have to invest to reach financial freedom. Starting early gives you flexibility and control, two things money can't usually buy. So how do you actually start at 18? You don't need a fancy financial advisor or a trust fund. Start small. Use an app like Fidelity, Vanguard, or Robinhood, and open a Roth IRA. That's a retirement account that lets your investments grow tax-free. Invest in index funds. These are groups of hundreds of companies bundled together, so you don't have to pick winners. A simple strategy? Something like the S&P 500 Index Fund. Historically, it's returned about 10% per year over time. And don't overthink it. The secret is consistency. Even if it's just $25 or $50 a month, that habit will put you ahead of 90% of people your age. Because what matters isn't timing the market, it's time in the market. Fast forward to your 30s, 40s, and 50s. While others are just starting to figure out their finances, your money's been working for you for decades. Your investments could be generating thousands in passive income every year. You could afford to take more career risks, travel, or even retire early if you wanted to. By the time you hit retirement age, you're not stressed about money. You're free. Free to live on your terms, all because you made a few small, smart moves when you were 18. So what happens if you start investing at 18? You give yourself a head start that most people never get. You harness time, discipline, and the power of compounding to build real wealth. Because the truth is, it's not about how much you make. It's about how early you start. The best time to invest was yesterday. The second best time is today. Start now, stay consistent, and let time do the heavy lifting.